Ready for the busiest time of year in real estate? In this video, we'll go over the 5 things you need to know if you're shopping this spring and how you can use data and market knowledge to empower your decision making. Hi, I'm Skylar Olsen, Chief Economist at Zillow, and this is Market Trends, where each month I'll help you unpack what's happening in the housing market. And because knowledge is power, we'll talk about what you can do about it if you're shopping. Number 1, expect a more balanced market. After a few years in a red-hot seller's market, the U.S. has moved towards a more balanced one. What does balanced mean exactly? The market is softer this year than last spring, and that means buyers can expect more time to shop and more choice in most local markets. Of the 50 largest metros we analyzed in the US, 15 are neutral markets, with 12 of those markets moving from sellers to neutral just over the past year. This list includes Las Vegas, Phoenix, Charlotte, Oklahoma City, and San Antonio. Be sure to check out the link at the bottom of this video to view our market heat index to see if your market favors buyers or sellers. Number 2, just how much you'll have to compete for your dream home? Well, depends. Competition will vary. You may be wondering what you can expect by way of competition this year, and that varies depending on where you're looking. The level of competition from other buyers depends on whether you're shopping in a buyer's market or a seller's market, whether mortgage rates are dropping, rising, or staying steady, and how strong other buyers are economically. So how well are local industries and their employees faring? These local factors impact affordability and the number of buyers combing through the available inventory, and ultimately will have a big impact on how much competition you face. Number 3, inventory is significantly higher. The total number of homes for sale is way up from last year and represents a mix of homes that are newly listed and those that have been on the market for some time. In February, the pool of homes for sale grew to a little over 1 million, more than any February since 2020, and is 15% more than this time last year. And remember what I said about competition? Well, the higher the inventory should mean softer competition among buyers. Number 4, sellers are still holding back. Okay, so while inventory is up, the really important number to watch in the coming months is new listings. Those are homeowners who have made the decision to newly list their home. In February, new listings increased by a little less than 3% from the previous month. Compared to the same time last year, however, that's almost 5% fewer, an indication that sellers are still holding back. Now, if interest rates drop, we're likely to see more sellers list their homes, but in turn, lower mortgage rates may also draw more buyers to the market. Here's what we're seeing regionally. Owners are holding back even more than last year in the Midwest, Northeast, and Florida's most expensive and competitive market, Miami. The driving forces in each of these regions are likely different. In the case of the Midwest and Northeast, the fall of newly listed units is a multi-year trend. Building new homes hasn't kept up with the growing number of potential buyers, keeping home prices high, and with it the opportunity to use home equity as a piggy bank and stay in place. Meanwhile, new listings are up big time in the West, the Southwest, and throw Denver in the mix there too. And that is a change for these regions. They are opening up when, at the start of last shopping season, they were among the most held back. Again, the driving forces will vary from place to place. Increasing damage from wildfires in California is leading to dropped coverage and rising insurance premiums. A financial incentive for fixed income owners in particular to revise their current housing plans. The upswell of new listings in Silicon Valley, San Francisco, and Denver could be driven by local job market dynamics. And new construction in Phoenix gives existing owners a better chance of moving up and out of their homes. Number 5, interest rates are a wild card and have bounced around between the low 6s and just above 7%. Looking towards peak home shopping season, we expect them to remain volatile and end the year at about 6.5%. Mortgage rates did trend downward in early March, but whether they stay there or go lower is anyone's guess given the uncertainty around the impact of all sorts of government policies. Whew. That was a lot of information and ups and downs and even a few uncertainties. But the good news is that if you're working with an experienced local agent who knows your market, they can help you craft a strategy tailored to your personal circumstances and what you are looking for in a home. Here are some other ways you can be ready this season. 1, get your credit score in the best possible shape. If you're planning to finance your purchase with a mortgage, you want your credit score to be tip-top. Having a good credit score helps you qualify and get a better mortgage rate. Better mortgage rate equals more affordable. 2, get pre-approved to see what you can afford in your market and be ready to move quickly on a home that checks all your boxes. Showing sellers you're financially prepared to buy is hugely important, especially in competitive markets. One way to do this is to get pre-approved for a mortgage. Pre-approval is when a lender commits to lend you a certain amount of money under specific conditions. 3, stay on top of how interest rates could affect your buying power. If you're serious about buying a home, you want to focus on homes you can afford and be nimble as market conditions change. Zillow's free buyability tool gives you a personalized estimate of how much you can afford to spend on a home based on financial information you provide and, importantly, current mortgage rates. The tool, which is powered by interest rates from Zillow Home Loans, also allows you to shop for a home based on those criteria. Be sure to subscribe to our channel on YouTube and our Market Trends newsletter for all our housing market updates. And as always, good luck out there.